You want to try in and just turn it right on you?
Either that or I can talk loud.
Yeah.
Can y'all hear me? Can you hear me in the back? Okay, we're good.
You're good then.
If I start talking too softly, just yell at me.
I'm deaf, so I don't get to hear a lot.
Oh, I wear hearing aids. So.
I did too. No,
So you just wear one now?
no, it throws me off. I can't keep up with it. That's where I'm at.
I'm Steve Nettles. I'm with Tax Pros Plus, and our primary business is we solve tax problems. We help people to get a call or letter from the IRS or the state. We work with them, give them free consultation, and get them headed in the right direction from that point. But we also do bookkeeping and tax returns. And so I want to pass out a little literature right now, because when small businesses, and that's what the majority of y'all are here, are small businesses, when they come in and talk to us, they always want to know how long do they have to keep their records. How long you keep your payroll tax records, your insurance policies and everything, how long you keep anything pertaining to taxes. This little brochure here will give you that information. So this gives you a breakdown so you'll know how long you need to keep your records for your business pertaining to taxes. First, your accounts payable reports, accounts receivable reports, audit reports, anything pertaining to it gives you an idea of how long you need to keep records. Like your tax returns, the IRS says permanent. And when we get into that, I got another little topic when I pass out one of the topics I'm going to talk about. It'll hit some of these points. It'll give you a way that you don't have to maintain all these records for that long. Your bank reconciliation reports is 7 years, but you'll have time to take a look at that as time goes on. The other thing is, a lot of people want to know about the tax changes that's going on with the last year and this coming year. So take one of these. This is from 2018, but there's not many changes from one year to the next on this. That's a slide chart. Makes it easy for you.
Oh, that's cool.
Yes, that's part of your current record. Normal is 6 years, but if you ask me, the IRS says permanent. And a lot of people wonder, why do you think permanent? One of the reasons why they say that is you have a rental property. You put it into, you started to rent it in the year 2000. When you depreciating that property, how long do you depreciate it for? Anybody got an idea? How long?
17.5.
So you have to keep your records that long. That's why they say permanent on tax returns you're thinking. And also you have to keep it plus, I always say you keep it 3 years longer than what's required. So when you, 27th year, you fully depreciated that property. So then you keep it 3 years after that. That's 30 years. You have to keep it if you have rental property. If you keep flipping rental property or moving around in it, makes the changes. So you have to think about that when you're working with that. But this little slide chart here lets you know what the tax brackets are, mortgage interest if it's deductible anymore, casualty losses. Just slide it up and down, and you can read the old law and the new law, and the changes on that. Did everybody get one of them? A couple more? Got ink pens too if anybody like one. Okay, so now the other most important thing that everybody wants to know. Dan, I need your help one more time.
All right, bud.
These are, they always want to know what can a small business comes in and say, what can I write off on my taxes? What can I deduct? That's what everybody wants to know, what they can deduct. So this is what we're going to talk about now. It's just tax deductions a little bit. Just look at the one on the front. It says business tax deduction for 2019. What I'm going to do, I'm just going to walk through them sort of quickly. I'll skip some. I don't have 100% of the correct answer for everything, but if we do have one specific and we don't know the answer, you can always email me and I can get the answer to you. But a lot of these are simple. Everybody knows you can write off accounting fees. You hire me to do your books, or your taxes, it's deductible for your business, not for your personal 1040 tax returns though. Advertising, any money you spend on advertising, you can write it off as a tax deduction. Next one's auto expenses. Auto expenses are deductible. You have a couple of ways of doing auto expenses. One, you do the actual expenses, and the other one you do is mileage. You can't do both on the same vehicle. And if you start with actuals with the vehicle in the beginning, you have to stay actual for as long as you own that vehicle. If you start with mileage, you can start with mileage for a few years. If you decide, oh no, I want to change it over to the actuals, you can change it over. And there's a lot of reasons in your business why you might want to make those changes. If you have any questions while we're going on, just yell at me or raise your hand. Yes?
Does actual include something more than mileage?
Actuals is the actual expense that you spend on the vehicle.
Okay.
The interest, oil changes, tires, yes. You get to depreciate the vehicle. And we'll talk a little bit further down. I got a couple of items on here about depreciating the vehicle. Why would you want to claim actual? And also I'll let you know why the IRS says you can't switch from actuals to the mileage. And we'll cover that in a minute on that. Bad debts that you cannot collect. A lot of people get confused with bad debts. I loaned Santa $500 and he laughs at me because he spent it. He said, I'm not going to give it back to you. That's a bad debt. I can write that off because it's actual money. But Santa came in and I did his taxes, and I said, well, Santa, I don't have enough money to pay you, so let's set up a payment plan. We charge you $500, $100 a month. We get one payment. I don't give you more payments. Well, that is a loan, because I loaned you the money. He set up a payment, but you can't write it off. Because you can only write off your actual loss. And a lot of y'all in this business, y'all know too, y'all may end up with this. You can only write off your, it's the only thing, because if my accountant in the office prepared to return, well, I wrote that off of my taxes. So that's the only thing I'll get to write off. I don't get to write off the $400 that he didn't pay me. So y'all understand the concept on that? A lot of people get confused with that when they come in, because they say, well, you know, I wrote a contract on a house for $100,000 and I only collected $50,000. Well, and you had to repossess it. Well, you don't get to write off the other $50,000. Because you have to take in the picture of the losses that's involved in the house exactly. It's what happens, not the money that you didn't collect.
So my bank stock that I lost last week, I can't write that off.
When you sell it, if you sold it, you can.
I lost it.
Oh,
The bank sold out, and the new bank bought it out and devalued the stock down to 5 cents, but it was at $47.
Until you can't write it off until you sell it or dispose of it. But when you dispose of it, any cash, the difference in between it and what you paid for it, if it's valued at zero now and you throw it away or liquidate it, I'm not sure how you liquidate the stock. Anyway, if you did that, then that difference you get to write off with a tax deduction. Because that's actual loss that you had. You paid $10 for it, it's worth zero now, then you get to write off that $10. If it's $10, it went up to $40, it went back down to zero, all you get to write off is the $10 you paid for. Banking fees, any fees that's involved with the banking, you get to write those off. Board meetings. A lot of you have LLCs, and if you have your board meetings and you have an event because you have more than one person on the board, you have meetings, you get to write off the expenses associated with that. Building repairs and maintenance. Now, if you're going to keep the house as a rental property in your business, you get to write off the building repairs and maintenance. If you're going to flip it, sell it, it becomes inventory. So you don't. That house becomes inventory. So you don't get to write it off until you sell it. Follow me on that? A lot of people ask that question too. They want to write off, but they put down the new carpet and the flooring and everything else. You can't write that off because when you sell it, because it goes into inventory. Now, insurance that you have on the property, those type items are direct expenses. You get to write all that off during the year. But when you invest back into the property for an inventory purpose, you don't get to write it off at that time. You just claim it when you sell the property. Business association membership dues. This association pay dues here. You get to write off on your taxes. Business travel. When it's business travel, you get to write it off, not personal travel. And normally you say, if you got to ask me which one it is, well then you already know what the answer is. Because if you go into Columbia to see your girlfriend, no, you can't write that off. But if you go and look at a house that you're going to potentially buy,
Then go see your girlfriend.
you then go see your girlfriend. There you go.
I'm buying it for my girlfriend.
I'm sorry? I talk a little slower sometimes.
We can play that game all day long. What if, what if, what if?
Exactly, yeah. Cafeteria health insurance plans, if you have employees. Does anybody in here have employees? Subcontractors? You subcontractors? Do all the work yourselves, that's good. Keep you healthy anyway, right? Cleaning, janitorial services, get to write those off. Collection expenses. I decided I was going to hire me an attorney to try to collect my $400. The attorney charged me $300 to try to collect my $400 for it. I get to write off that $300. So I still don't get to write the $400 off because it was for work done. It's already written off as my operating expenses. Commissions to outside parties. Real estate agents, for example, when you're doing closings and things, those are expenses incurred, so you get to write those off. Consulting fees, continuing education for yourself to maintain your license and improve skills. Conversations and trade shows. Any of y'all do trade shows? Credit cards and convenience fees. This one, de minimis safe harbor expense. Has anybody ever heard that? Okay, I'm going to touch that one right quick. It may not fully pertain to you, but you remember I mentioned earlier about depreciation and your auto expenses. But anyway, what we want to look at, if you can set it up in your LLC. You have multiple LLCs like some of you do. I don't know whether you really will go that far. If you have one primary LLC, you can write up a little policy for de minimis safe harbor and put in there and state that any expenses that you have, anything that costs less than $1,500, you're going to expense it out. And so if you buy a computer valued at $1,500, you just write it off as a business expense. And you say, well, what's the difference? Well, originally, when you had like a computer for $1,500, you had to depreciate it, keep those records until you disposed of it and everything else. Well, the new reg says if you set up this policy within your business, you want to expense anything off that's less than $1,500, but you don't have to maintain those records. You just keep it in that one-year tax return, for example. That $1,500, instead of depreciating it, you just write it off as a business expense for that year. And you can go higher, $2,500, $3,000. I think anything over $2,500, you have to have an audit, or maybe $5,000 for an audit now, I'm not sure. But the exact dollar amount on that. If you're interested in knowing more about it, I'll be glad to explain it to you. Now, auto, okay, you see on there it says proposed. This is the new regs that they're looking at doing with the auto bill. Before, you had to have a 3/4 ton to receive the accelerated depreciation. The proposed ruling now is that you can, smaller vehicles, if you buy it and put it in service in 2018, did not have it in service before 2018, you better claim an accelerated depreciation on it. Then you just read through it and see what dollar amounts are. For you can claim up to $18,000 the first year. Yeah.
Does that include used vehicles that you purchased in 18?
That's correct. And it states that in here too, because I looked that up. Because a lot of people buy a vehicle that's a couple of years old. That's what I do. I don't very seldom buy brand new. But yeah, when it becomes yours, if you put it in the operation of your business, then you can depreciate that vehicle.
Does it have to be in the business name?
No.
No?
Are you a LLC?
Yeah.
Do you do a Schedule C tax return? Or
This would be my
S-corp?
first year, right?
First year, okay.
The schedule.
You'll be a Schedule C then if you have not designated to be anything.
Right.
I talked about that last year when we did. We talked about LLCs and S-corps and C-corps at the meeting last year. That's what we discussed then. But the depreciation for 2019 is up to $18,000 for the first year you can write off. Second year you can write off up to $16,000. This is all on the same vehicle. And it's then $9,700 and then $5,700 and then probably be about written the whole vehicle off then. Because a lot of times you buy a 3/4 ton van, truck, it's going to cost you 40 or 50 grand if you buy one a year old or something. And a lot of people are buying them because they need a bigger expense this year. We do some tax returns for doctors and different things, and when November rolls around, they'll say that, I got to go buy me another vehicle, because they want to get that large deduction up front. But it's explained there for you. If you think about it, got any questions about it, you can always shoot me an email. Dining during business travel, education. We did have entertainment on here, but I took it off. You don't get to write off entertainment anymore. Employee wages, equipment repairs, and like I mentioned before, so think about this. Equipment, if you buy the saws, table saws, $400 or $500, I'm sorry, you can write that off. You can expense those items out if you set up that safe harbor. You don't have to maintain those records for a long period of time. And family members and wages. Yeah.
The safe harbor, is that a document, or is that just
There's a policy that's within your LLC.
so it's a written?
Steve Nettles LLC is set up a policy that anything that my LLC purchases, and that it's
It's
more
in the
detailed.
articles of organization,
And you
something
can-
like that?
Yeah, no, it'll just be an amendment to the bylaws. Or operating agreement.
Operating
Yeah,
agreement?
it'll be added to your operating agreement. You just Google it, safe harbor, and then it'll give you a paragraph to put in there to set it up.
And if you're an owner?
And you only need it if you get audited.
Right.
If you never audited, then you don't need it. But if you do get audited, they're gonna say, where's that receipt for that computer you paid $2,000 for?
You gotta say,
Well, you show them your safe harbor policy. that you don't have to
But,
maintain.
but in other words, a lot of people here are owner-operators, let's just say, so they would, I mean, I don't have that policy, but I kind of follow the rules, but I could just go print one off if someone asked me. I mean, I don't want to say I'm like backdating it or something, but in other words, I need to have that policy, is the bottom line.
I would just have it and then just Google it and set it up and put it in your folder with your
I mean, I don't
your
even-
bylaws and operating agreements, and you'll have it.
Yeah, I don't have an articles of organization for myself. I mean, maybe I should, but, I just maybe.
It's no right decision
Yeah.
whether to have an LLC or whether to do it
Okay.
or not. There's no right decision. It's whatever you feel like is
Okay.
the most comfortable and best way for you to operate. That finishes the first page. So I'm going to give us a break now, and I'm going to introduce someone else to come and talk a little bit. At the last meeting, and also during the year, I got a couple of calls from some members, and they asked about CFO work, also business evaluations, and that type of stuff for their businesses. So, and that's when you're starting your business or got a business going up and going, you need a little advice on where to head and where to take it. We don't give that type of advice, so I refer them to somebody. But I brought Paul, the CFO, and also a CPA. I brought him this evening to tell you a little bit about that end of the business. So Paul, I'd like to turn it over to you for a little bit.
All right, like Steve said, Paul Evangelist, I want to thank you all for having me here tonight. Hopefully I can add some value to you, and feel free to throw out some questions if you do have any. So yes, I can help with any financial information that you're looking for. I can also help with evaluations, but it has to be internal. You can't say to somebody else, well, Paul said the value is this, so that's the value. You can't go and do that. It's got to be internal, and there's IRS regulations and all that as to why that can't go outside. But I can just do one for any business owner, but it's just for the business owner. And anything financial, feel free to look me up and call me and see what we can do for you. Been doing accounting since I got out of college back in 1987. I've been down here in Charleston since 1994. I know the area pretty well. Been investing in real estate since 1998, so I understand the real estate world. Two of my clients currently are working on deals on the commercial world. One's multifamily, one's a commercial strip. One of them is with the Veterans Administration Support Network. His name's Tim Taylor, if anyone's involved with the veterans. Really cool situation that he started where he's got a whole team together, real estate agents, builders, etc. where we come together and we find properties, we'll build them. The administration, the Veterans Administration Support Network gets a little kickback, a little bit of fees from that, and then he uses that to fund deals where he can go in. Probably he'd be good to come to this meeting and maybe buy some of y'all's deals, where he has the veterans go in and work on fixing the place up, and then a veteran will move into the place and pay rent, hopefully below market rent, for them to start a new life if they need to, or just get a better deal from what they're currently doing. So it's a great business that Tim's running. It's a non-profit, so everything gets put back in, which is really nice. And then the other one is this commercial development that we're working on, for profit, to basically get this one investor up and running and starting. So I'm helping them with their financials. Once again, he has his own team of real estate agents, appraisers, and all that kind of stuff to help him out to get that going. I do have some rental properties, long-term holds. Not looking to do anything with them other than be a passive rent collector. So I understand the industry very well. Not much I don't know about in that world. Santa told me about the trust gentleman back there, which I have my properties in the trust, so that's a good thing if you want to stay under the radar. Definitely talk to him back there and learn about those trusts. I don't know if anyone's ever thought about doing the 1031 exchange. Has anyone heard of the 1031 exchange? Yes? A lot. Good. Good. Yeah. So that's really good if your end game is to basically never get out of it, and just at some point, you become dust and your heirs get all the properties at fair market value, which is really nice, especially for those properties that you hold for more than 27.5 years and they have no basis. So if you go to sell it, you sell it for $200,000, you're going to have to pay tax on $200,000. But with the 1031 exchange, you can pass it to your heirs, they get $200,000 basis, they can sell it that next day, they pay no tax. So that's a real good game to play if that's going to be your end game. It doesn't make sense to buy a $50,000 property, sell it, keep moving up. Now you have a $400,000 property and its basis is like $20,000, and then you go and sell it. Now you got to pay tax on all that. So make sure you understand the rules if you get into something like that. Other financial stuff that I could tell you about, I do non-real estate stuff too. I helped a woman purchase a business, a wedding planning business. So that's on the financial side, helping her with that. I also helped with negotiations, which I'm pretty good at. And do other things that are kind of outside the box when you think of CFOs. But a lot of the stuff I do is within that box, very strategic. I help people set up their strategic plan. So some of us as business owners, we just get into the business and we just do it. We don't really have a 3-year plan or a 5-year plan, 10-year plan, or even an exit strategy. What are you going to do with this business? What is your goal? What's the purpose of doing it? Oh, I just like to do it, or oh, it's a hobby, or well, it's my full-time job and I don't know when I'll get out of it. That's all good. But what's the plan? How are you pushing yourself? Every year, what do you hope to improve by? Every quarter, what are you looking to do? When I got into real estate, I said I'm going to buy a property every quarter. And I had a little plan as to how I was going to do that. And it's okay if you deviate from the plan. It's okay if the plan changes. But you are a business. If you're going out there and you're doing this stuff, it's a business. And every business needs to have a good strategic plan to follow. You should be writing a business plan if you haven't written a business plan. And all these kind of things that, yeah, I don't want to do that. That's a waste of my time. It really isn't. You can knock it out on a weekend or something, at night. You can just knock it out. It's really not that hard, and it gets you to think about what are you truly doing, and how can you improve? You know, what are some good marketing strategies that you could use to either get more properties or sell? So, any questions right now about anything that I've talked about, or something that's popped into your head while I've been talking that you'd like to ask?
Yeah, I have a nonprofit, and we're about to start with the City of Charleston Housing Authority.
Excellent.
And I'm looking at how can I get some funding capital for some major projects. We'll be doing some of the rehabbing, but in the meantime, we're looking at some of the new construction. And so I need to know what I need to do and set up my organization how we can do that.
Right. How long have you been doing this?
Well, I've been doing rehabbing about 6 years now.
Okay.
But I'm doing it with the state.
Okay. And is this nonprofit, is this new?
No, well,
6 years or you?
7.
7, okay.
Yeah.
All right, so you're set up as a nonprofit,
Yes.
and you're doing all this through that nonprofit.
Yes.
Okay, that's good. You're probably,
But we're going to develop an LLC. We're developing an LLC right now, so we can work with the city.
so the LLC will be for-profit.
Right.
Got it. Okay,
So we're trying to make sure we keep merging with someone else, so we can keep both entities separate
Right.
and not lose the nonprofit status.
Right.
Even though we're bringing the consulting side to that new business.
right, very good. Did you all hear that? Because it's very intelligent, what you're doing. You can have a nonprofit arm, right, that does the work for the for-profit entity, if I'm hearing you correctly. Yeah. So that's really cool, because there's benefits to doing that, both from a tax perspective and just from a liability standpoint and other things. So that's really cool. So maybe I didn't understand. Did you have a question with that?
Right. In terms of when I'm looking at future for new construction, working with the city, what would be the best route to be able to get funding?
Funding.
Right, to do that. I mean, we can over time develop capital through
Right.
doing those
Right.
projects and
Right.
just build it. But
So you're looking for somebody to invest either as a loan or as a percent ownership
yeah, possibly.
for funding money?
Right.
Yep. Let's talk afterwards. I'll give you the name of somebody that can probably help you with that.
Okay.
Investors are people who invest money. And does anybody here have anybody that they use to invest with them, or are you using your own money? Nobody's partnering with a money partner.
I want to.
Yeah.
I mean,
Are you aware of the opportunity zones for businesses here to get funded? Because the opportunity fund zones,
Mm-hmm.
you could pitch your business idea to that council or, who governs it to see if your business idea can get funded, but it has to benefit those communities with that opportunity zones.
Right.
So is that going on in the Charleston region?
Yeah, there are opportunity zones here. You can just Google it and see the map. It's not laid out like cities or towns or anything like that. It's like a strip along this road, and one side of the street is, and one side of the street isn't. So it's kind of complicated so you got to be aware of the areas that are.
is that for profit too? Or just?
Oh yeah, you would, as a for-profit, you would definitely want to take advantage of that. For a nonprofit, it's really not anything meaningful because it's a tax advantage. And as a nonprofit, you're not paying the tax anyway, so it's not advantageous. But those are the areas that need it.
The opportunity zone is buy and hold.
There are rules for that. I think it's like a sliding scale. But if you hold it for 7 years, then there's a real nice benefit for you. And then I think you have to hold it at least 2 years. Don't quote me on that. You'll have to look it up to get any benefit. But there are benefits, and it's nationwide. I know Tim Scott came down here and he laid it out, the areas that it's going to be. So there's method behind the madness. I don't know if it was political. I think it was really based on need. So it's really something that you know, to save taxes, it's a great idea. And it's usually when you go to sell. So that's a good opportunity. Anything else? Nope.
You were touching on private lending, I guess.
Oh, yes.
You were asking if some of us use private lending.
So I'm sure you all know other people's money, right? I mean, when you go to get a deal, you're going to want if you're going to buy it, you're going to want the seller to do seller financing, right? So that you don't have to put up the money and all that. So if you want, it'd be interesting to look into and then judge for yourself, partnering with a money lender, similar to what you're talking about, John, and using their money. You know, some of them just want 10% on their money, which is not bad. Others might want equity, and you'll have to figure if that's worth it or not. But it's quite common here where there's investors out there that are looking to partner with you all on real estate deals where, you know, for the most part, they're getting 10% on their money, and they're not doing the plumbing or the renovations or anything like that. And that's the world they like. They're usually older, so they don't even want to be doing that kind of stuff as they get older. And they're willing to, instead of keep their money in a investment, you know, real estate or a stock market investment or anything like that, they're willing to put it out there in real estate as a loan and just get 10%. Some won't even want the money, and if it's like a buy and flip, they'll wait until it flips before they even want their money. So, you know, you get paid and then you pay them. So there's some really good opportunity for you out there. If you're stuck and you're like, oh, I want this property, but I don't know how to afford it, it's a wonderful opportunity. If you have your own money, that's your choice. But other people's money is always a good answer in real estate.
Yes.
Do you know of any good money lenders in the area?
I don't deal with them. They're out there.
Okay. You ever heard of Universal Mortgage something? I put the meet with next week about that.
I haven't heard of them, but yeah, go and meet, see what they have to say. And it's one of those things where, you know, if somebody finds like a company like that, you know, bring it to the group. You all can benefit from that, because you know, people who invest money in real estate, most of them are very particular. You know, oh, I only want mobile homes. Oh, I only want single-family housing. Oh, I only want this area of town. So, you know, you might find one and they're not willing to invest with what your property is, but maybe this person's property they would, or that person's they would. So it's interesting. It would be kind of like a cool project for the group to do. Just go out and find a couple and come to the next meeting and report. Because it'll help you. It'll grow your business pretty quickly. Because you know you're probably going to make more than whatever you'll pay them, the 10%. You're going to make more than that. So they get a little bit, you get a little bit. That's good. It means more deals. All right.
Okay. Thank you,
Thank
Paul.
you, Steve.
Thank you, Paul.
Okay, did anybody have any questions about expenses? I didn't really cover the alter expense much. Yes.
Property management expenses, is that deductible?
Yes. If you do it yourself, no. If you contract it out, yes. It falls into that category of your time's not billable to your company.
But your materials will be,
All the materials are.
not your labor.
Right. Not your personal labor. Your sweat equity, as they call it, yeah. Did y'all understand the automobiles? I need to explain that a little bit more. Mileage and actuals. A lot of people I want to mention one other thing. A lot of people get bogged down into it, but most of the time, the mileage works better. Does anybody know what the mileage rate is?
55, isn't it?
Roughly 55. Yeah. And so, to give you an example, if you drive your car 10,000 miles a year for business, that's $5,500 deduction right there that you'd have. Give you an idea. So think about it that way. And but you have to keep up with your mileage. You just can't say, oh, I think I drove 10,000 miles this year. We need to know how many miles you drove when you go to your accountant and do your taxes. Yes.
Good question for you, Steve. So, like right now I'm 1099. So like every day, like when I get my vehicle, I just have like an old school, just a notebook what is there, what's the, like when I go to an accountant or if I come to someone like you, what do I need to know like each day how much I drove?
What I wanna know is how many miles you drove in that vehicle. 10,000 miles. You say, well, 5,500 of it for business and 4,500 of it was personal. That's what I wanna know. I don't wanna know how many miles you drove every day. But you wanna keep those records.
You can use the Mile IQ app. It's
Yes,
like-
that's a good one.
Yeah, it's
Is it
like-
free, or is it
No, it's like
$5?
$5.99 a month.
Yeah, $5.99 a month?
Yeah.
Was it,
But you can do classifications on it and stuff like that at the end of the day, and so you can do personal, business. I mean, and you can even kind of like put it in blocks in terms of like places you go consistently and stuff, so
Yeah,
it
works
keeps
good.
it up a lot
A lot of
better.
people will keep up with it on that.
Yeah, it's straight to your cell phone, you know, pretty much most of the time your cell phone is about glued to your hand anyway, so.
Yeah, so my vehicle is 100% business use, and I keep everything up on my Google Calendar everywhere I go every day. And at the end of the year, December 31st, I print out my calendar and I put it in my tax file. I know everywhere I went. This meeting's on my calendar. Everywhere I go is on my Google Calendar. And also where all my employees are is on the Google Calendar too, so I keep up with everybody through the Google Calendar system. Okay, let's see, let's look right quick. If anything, gifts to customers, $25 limit.
What is that?
$25 limit, gifts to customers. You give them a $100 gift card from Red Lobster or somewhere, you only can deduct $25 of it for gifts. You buy them a $50 bouquet of flowers and send to them because they sent you that perfect house you wanted to buy, you only write $25 of it off.
That means we're going to Cracker Barrel, not Red Lobster.
There you go, that's it. And the rest of it's pretty well routine. Management fees, materials, maintenance, medical expenses, if you have a plan in place. Payroll taxes, parking lots, parking and tolls. If you're claiming mileage and you're not doing actual, you still get to write off any parking tolls or any those type of expenses that you incur. It's still tax deductible over and above the mileage. But any repairs on the vehicle, if you're claiming mileage, you cannot deduct it.
How about parking tickets? You write those ones off?
That's a violation that's not deductible anywhere.
Ah, okay.
Parking.
What about, the pension plans and retirement plans that are listed?
Yeah, that's
What
a-
part of that is?
Yeah, any expenses associated with it, administrative expenses, anything associated with it.
The
And if you-
fees
Yeah, and now, if you have employees or staff and you set a retirement plan, any money you put in for them,
Okay.
it's tax deductible.
Really? All of that stuff?
Yeah.
And
You have
then-
401, Paul, you might want to correct me on this. This might have a 401K or whatever through their business, and they invest in it, and that's a tax deduction for them, correct?
Not for the business, for the.
For the individual.
Yeah, that's
Steve,
certain.
if Steve Nettles owns that business, and I put money in a 401K, I'm gonna take my taxes when I draw it out down the road.
So as
So
the-
today, I wouldn't have to pay taxes on it.
Business owner, the cost of paying a firm to hold the plan and pay an advisor fees to manage the portfolios or the accounts is, you can deduct from
Correct.
tax.
Correct. Any other things, any other thoughts on expenses or anything? I'm sorry, right here.
So if you buy a car and, it was $16,000 and, in 2 years you sell it, you get rid of that car, should I go with actual because it's a substantial?
That's a good question. There's two ways to think, there's really no right answer,
Yeah.
because, you pay $16,000, you depreciate it over 2 years, it's zero, right? I go and I say, well, I'm just gonna sell it, and I sell it for $10,000, that's all it's worth. Well, you depreciate it out to zero, so now I got to claim that $10,000 on my tax return as income, because you wrote it off as an expense.
But if I would have done mileage,
But,
then you don't have that.
so you pay $16,000 for it, and then you claim mileage, and you're gonna end up with $5,500 deduction because you drove 10,000 miles this year, 2,000, well then, you don't have to worry about it.
Even if I sell it, it's not an income.
It's not right. Might even if you paid $16,000 for it, you still can't depreciate it, but you will not have to pay
So
when you turn it over and get rid of it. Anything else on expenses? Okay.
Would you even say that if you trade it in? Like if you pay? if
We
you
still
pay-
get a value, whatever value they give you for it.
That's still taxable?
For example, you paid $10,000 for it, you traded it in, they allowed you $5,000, that's $5,000 difference. If you depreciated it, you'd have to claim that $5,000 as income that they allowed you for. But then you turn right around and deduct the new vehicle you got, it offset it. Replacement vehicle. If you did the actuals.
Yeah.
But if you do the mileage, then you don't have to worry about keeping up with the actuals. Okay, at this time also, another topic that was important last year was insurance. I want to make sure everybody is covered well with insurance. And also, so I invited Angela with ABRI Insurance, and she's going to talk with us again this year about different insurances. Come on up, Angela.
Thank you, everyone, for having me again this year. So yes, I'm Angela Herndon. I'm with ABRI Insurance. My office is right around the corner on North Rhett. I am an independent insurance agent. What that means is I'm not tied to one particular carrier. I have several carriers that I'm able to shop your insurance with so I can get the best deal and the best coverage. I've worked with several of you since I was here last year, and the three main insurances that I find that you all need: general liability for your business, builder's risk for those of you that are renovating the homes, and the third one is dwelling and fire, or also known as a landlord policy. If you're a landlord, you want to have home insurance on your home. So general liability is going to cover you if somebody tries to sue you. So your business could be one lawsuit away from having to close up shop. It is very expensive if you get sued. That's what general liability is there for, to help protect you. Get yourself a lawyer, help fight it. It doesn't matter if the case is legitimate or not. You're still stuck in the mud with having to go through everything. So it's good to have some general liability to protect your business and your investment. Builder's risk, that's going to cover your property that you're renovating. I can do a builder's risk policy for 1 month up to a year, and really the only information I need would be what the value of the home is going to be when it's complete, how long you need it, and then if it's going to be a complete renovation or just from, gutting it, or just minor stuff. What kind of renovations are you going to be doing? And then lastly, the dwelling and fire. That's the policy where you want to worry about the dog, what type of dog that they have, because they don't like pit bulls, they don't like Rottweilers, German Shepherds. They're all blacklisted from those. There are some policies they'll let you exclude it, but like someone was saying, if somebody comes at you with a lawsuit, if that dog gets out and bites somebody, I think Santa was saying it, you're even though insurance won't cover it, you're still stuck in that, having to deal with it. So, anybody have questions for me? And you were an insurance adjuster?
I was.
Okay.
Yeah, I was an insurance adjuster for about 10 years.
Okay.
So I've seen the side of it where, the claim actually, the rubber hits the road, let's just say.
Right, right.
So not all policies are created equal.
No, definitely not. And I found, especially this year with the hurricane and all, I had a lot of people that were calling me wanting to make claims. You need to know what your deductibles are before you try to make a claim, because the last thing you want is to file a claim, get no money for it. It's still a claim on your record, and your insurance rates are going to go up. So it's always good to talk to your agent before you make a claim and kind of get a feel for, find out what your deductible is, if it's worth claiming.
So if you're buying a house, do you want to check what flood zone it's in? Especially in where we live. That's another thing you need to think about, flood zone, because in the classify right or wrong flood zone, then you need to have the hurricane insurance.
Well, it's actually a flood policy,
Okay,
would be
perfect.
separate. Yep. And flood is considered rising water, so from the ground up. So if you get a hole in your roof and water comes in that way, that would fall under. It wouldn't be a flood. That would just be water damage.
What flood do you carry?
So I've got FEMA, obviously through, and then I've got Neptune is a private flood company that I use, and Tip Tap is another one that I use that's private. So with the private flood, you get a lot more coverage. FEMA stops you, you can only have $250,000 for your home worth of coverage for FEMA, and the private ones go up to whatever you need it to. They give you loss of use, so if you're kicked out of your home, or if you're, well, your renters should have renters policies. That will cover them if they can't live in the home for a time, but it would cover you if you're not getting rent right then. And yeah, you get replacement cost versus actual cash value
I'm
for
sure give me
FEMA.
a card. I just went through a fiasco with FEMA.
Oh,
And,
okay.
are you in Horry County?
Yes, yep,
Okay.
yep. As long as it's in South Carolina.
South Carolina?
Yep, as long as it's in South Carolina.
I want to hit on one other insurance
Yeah.
issue here too. Is everybody think about it. But when you're buying houses, flipping houses, whatever, you want to have, I call it an umbrella policy, but that's general liability,
Yeah,
sort of the
general
same thing.
liability. Mhm.
You have a policy, and do they get that, can they attach that to their homeowners, or is that a separate policy they have to have? When they're flipping, they may own this house today, but 3 weeks from now, they may not own it anymore.
Right.
So how would they go about getting a
So,
policy to take care of them? Because you want to make, like I said, you want to make sure that part's taken care of. Because somebody, you get a contractor and then they fall on and get hurt, and I reckon they'll fall under the umbrella.
yeah, general liability.
General
Yep,
liability.
that would be their general
So
liability.
That's probably one of the most important insurances that you can have. You don't want to look at losing everything. Or being, like you mentioned earlier, being tied up in that lawsuit, having to hire an attorney to take care of yourself. So you think about that, having that general liability policy for you.
Should you have it, if you're using a general contractor that's licensed and insured, have that as well?
You
Still
need
need
your
it?
insurance.
Yeah, you want to protect yourself.
Now, you can require him to give you a copy of his insurance.
Yes.
Or add you on?
No.
No?
Have him give you a copy of his, well, not unless you're working for him,
Or,
not unless you're his employee,
I got
subcontractor.
you. Okay.
A lot of those general liability policies exclude subcontractors.
Correct.
That's,
Correct. They would have
if you're
to have their
flipping
own.
a house, I guess there's a policy that, is more inclusive of the nature of that work. But if you just say, I have a general liability policy on a rental property, generally they're excluding subcontractor work because the expectation is that you're hiring a bona fide, certified, insured contractor, and that's the burden you have as a prudent investor. So they don't want to cover your guy off of Craigslist. That's not their role necessarily.
Yeah.
They don't want to cover dog bites. They don't want to cover mold. They don't want to cover certain categories because it's just not worth it. And you wouldn't really want to pay for that kind of policy if they get covered anyway because it'd be too expensive. So it's kind of,
Yeah, you never know what's going to happen either, but to give you a little example, I'm the president of our HOA association, and we have a liability policy, and we got one of our residents, homeowners, got robbed, and he walked out the house with a pistol while they was trying to steal his car, and they took the pistol from him and shot him with it and killed him. Yeah, who'd think it? And so we're being sued by the state, and that's falling under the general liability policy.
Yeah. Another thing is make sure your general liability has what's called medical payments on it. That's a little bit more of a, so you got what's the liability policy usually gives you starting at like $100,000 of coverage and goes up to whatever you want to cover yourself under. And then a medical payment is something that's a different category, which is a little bit more loose. An insurance adjuster can kind of make a judgment call and say, hey, let's shut this claim down and just go ahead and get some money out the door, and it's just taken care of. They're going to still do the investigation of whether it's covered or not, but they can get money out the door and kind of hush. I would say it's hush money because it's kind of like, but sometimes you get someone gets injured or something like that. Just, give them a couple $100 or, whatever. Maybe it's $3,000. They can just give them that money and go ahead and get a signed release and then shut the claim down, whether it's covered or not. So that's very important, from my opinion, is just have a medical payments part of the policy in addition to your general liability limit, is what it's called. And it's just, I mean, most of them have that anyway, but some of them don't. I've picked up some people's policies before and read them, and it's like, well, you don't have a medical payments, that means your claim has to be investigated, has to go through the whole rigmarole, and then maybe it'll be covered, and if it is covered, 6 months later, they're writing a check out. With the medical payments, they can just say, here you go, and you're settling people's, nerves a lot, and a lot of times it might just go away. So, something else to think about.
And one thing that Jay mentioned, I heard Jay mention earlier, you think about it, when you're hiring subcontractors, if it's for a sort of large job, or a small job too, and you think about it, requiring them to have their own insurance and giving you a copy of the policy so that you'll have it. So you'll know at least you got that much coverage. Now, of course, you hire someone off Craigslist, sometimes they're not going to have any insurance, so you got to, if you want to roll the dice.
And I hire people off of Craigslist.
We all do.
I do it, and I take the risk. I mean, I just take the risk. I stick them on something like holding a paint roller. I just put them on dumb work. Because usually they're dumb anyway, so, but I hate to say it, I just put them on dumb work, and it's like, man, I hope they don't get hurt with that paint. Like, please don't start like eating the paint or whatever, but yeah, something like that.
I had a client that hired somebody to hang up some mirrors in her home, and it was just like a friend of a friend, and he came in, hung the mirror, it fell off the wall, broke, and ended up slicing him. He ended up going to the hospital. He had no health insurance whatsoever. So she was trying to make a home insurance claim to help cover his hospital bills.
And I'll hire, when I hire people, I'm not trying to take a joke, but when I hire people and pay them per hour, or just a quick job, or even if it's like someone's mowing your grass, I kind of just get around them and like kind of even make a joke almost. It's like, hey, you get hurt out here, you're not getting any help from me. Not happening. I don't have any insurance. You're just, I'm just going to pretend like I don't know who this guy. And they laugh about it just like you're laughing about it now. But I go ahead and put it out there. It's like, look, don't get hurt out here, first of all, and let's play safe. That's obvious, But if you get hurt, like, just don't have some expectation that you're coming to me for it, Now, I'm taking a risk. It's probably a stupid risk. I'm probably going to regret it one day. And if this is being recorded, I'm just kidding.
It's not public, so it's all good. I'll cut that part out. Don't worry.
That's an old insurance joke. And if this is being recorded, I'm just kidding.
Any other insurance questions or any questions?
Good quick question. So what about like we have a lawn guy who comes in and mows our lawn once every 2 weeks. Do I need to ask him for a proof of insurance, or what do I do?
It wouldn't be a bad idea. I have a couple lawn care people that have their insurance, and they have, like, they'd be just mowing the lawn, it kicked up a rock and went through their window. So they filed a claim on his insurance, then they got their window replaced that way. So it's worth it.
Here's what I've noticed. If you're hiring the bona fide, certified, insured, all that kind of stuff, versus the Craigslist person, the Craigslist person's $15 an hour. And the one that has to have all these expenses, because this stuff is expensive. Workers' comp, just getting it done, getting licenses. Like, I have to do all this crap in my business. I hate all this paperwork. I feel like you're just doing paperwork all the time just to stay legit, So anyway, your contract that you're hiring to have all that stuff is going to be your $100, $150 an hour person. Now, that's cool. I'm glad they got that insurance policy, but just from a risk point of view, like I said, it's like, maybe I need 2 hours and I can kick someone 30 or 40 bucks. But if you hire that licensed and insured person, you're going to be kicking them $300 or $400 bucks, because that's their burden of their business to provide you that coverage that you're asking for. So it's just a trade-off. But like I said, it's just something to think about. I would say err on the side of having the person that has the insurance, so you don't hurt yourself. I'm probably a little bit more risk tolerant. I don't have a family. I don't have children. I can probably take a hit if I needed to, But some other people might not be able to do that kind of. So.
Any other insurance questions? Good. Bring business cards.
I do. Yep.
We'll pass them out.
Sure.
How about a short-term rental Like, how would that work? Like, if someone's Airbnb in a room from you and they trip and fall and hit their head on the, you know.
Are they just doing a room?
Yeah, so just,
Okay.
let's just say a room.
So your home insurance policy would cover them under that.
Okay.
Yep, as long as you're still living there.
Okay,
As
well-
a full-time.
Okay, if we're still living there, the whole.
Yeah.
Okay.
Yep.
What if it's like the whole house? You're renting out the whole house.
Then we'd have to look at a different policy for that.
Okay.
Yeah, it would be something separate.
Okay.
Yep.
Thanks.
Uh-huh.
Would, Angela, would they have a different policy if they put in I'm thinking about flipping houses now. They may only gonna have the house for 2 months or 3 months.
That would be a builder's risk, yeah.
So you have to have a builder's risk
Yep,
policy.
yep, and you can do 1 month, 2 months, a year. So, yep.
Thank you very much.
Thank you.
Well, that concludes our little program, unless you've got some more questions you'd like to ask. Okay, all right. Thank you all. We appreciate it. We had a good time.
Thank you.
Do we have anything else we want to talk about? Okay.
And you said you had a card?
Check, check. Okay, thank you all very much for coming out. It's very informative, much